With us now is Katie Stockton, Fairlead Strategies founder and managing partner as well. Katie, thank you so much for being with us here. Can you take us through the charts? Was there anything that you saw pattern-wise in those charts that indicated that we could be seeing a broader-based technology sell-off?
I mean, I think we're in the midst of it right now. The reason I think the NASDAQ 100 is outperforming today is because it is short-term oversold, whereas the S&P 500 and other benchmarks are not. So we are expecting a few days of stabilization on the back of that short-term oversold reading, but some damage has already been done. The NASDAQ 100 at the low today was down about 7% from its recent high. And that reflects weak short-term momentum and also weak intermediate-term momentum. This is within the context of the long-term uptrend. So we are looking at this as corrective, not the start of a big bearish reversal or anything like that. But we would note that the 50-day moving average, which sometimes is a little support gauge, has been taken out by the NASDAQ 100. And that puts the next support around the 200-day moving average, which I think right now is about 6% below. So that does create some potential risk. And what we're noticing with this growth underperformance is that some of the retests of support based on, in some cases, the March lows and or the 200-day moving averages are what we call unsuccessful, meaning we're seeing short-term breakdowns below those levels.
So if there are those short-term breakdowns there, can you take us through specific parts of that market that you are keying in on as possibly having even more downside ahead or maybe trying to stabilize at this point, poised for perhaps at least a near to medium-term bounce?
Right. So the near term, I think the bounce lasts a few days, and that might be something folks want to use as a selling opportunity, particularly in those stocks that have broken short-term support. Some examples might be a Baidu or a Qualcomm, and Everbridge is testing support. There's a lot of examples of that. And then we can also focus on the larger names that are very close to support levels. Names like Tesla, of course, as it approaches its own 200-day moving average, and PayPal is doing the same. So as long as these levels hold, that would be an incremental positive for the NASDAQ 100. But you can see based on the small and mid-cap action that there seems to be risk of a breakdown, just given the relative strength loss behind the growth segment. You can see even in the NASDAQ 100 index that it's taken out a short-term support level versus the S&P 500 index. So it suggests that beyond the short-term oversold stabilization, that we can expect additional underperformance by the technology sector.
Katie, are there certain parts within this overall market narrative now that have acted perhaps more like tea leaves in your mind, maybe leading indicators? I know in the past some traders have talked about the semiconductor industry being one of those perhaps leading indicators. Other parts focus on mega cap technology, fintech as well. Some say momentum. In your mind, in your career, have you keyed in on certain parts of that market overall that you think are the ones who might tell us a little bit more about the overall narrative?
Well, we sometimes get leading indications from relative strength work, meaning that loss of relative strength behind the semiconductor sector was somewhat telling. But also in this environment, this is a little unusual, but 10-year Treasury yields have been trading off for some time. They lost intermediate-term momentum well ahead of what we're seeing now in the equity market. And up until, I'd say, early March or so, they had maintained a positive correlation. So perhaps they were giving us a cue that indeed the equity market was in store for some consolidation of its own. We're also entering into a seasonally challenged period. That's how I like to put it, from May to October. So it was also natural after a very, very strong April to see some selling start to kick in.
So is this, Katie, before we let you go, I mean, it's the cliche time, right? Sell in May and go away. Is that the strategy this time around?
I think things might get more difficult, but we've seen some real bifurcations on the sector level. That means you can still take advantage of the market on both sides. There's some sectors that are really starting to work here. We've seen breakouts in a lot of cyclical sectors. And now, of course, with this pullback, we're getting some more defensive rotation. You really saw that yesterday with outperformance from precious metals, from healthcare, especially pharma names, from utilities even. So there are ways to take advantage of a more difficult tape for the major indices.
Shepard Smith here. Thanks for watching CNBC on YouTube.